Well, happy Friday, everyone. It is Friday, September 9th, and I'm Dave Weisberger, CEO of CoinRoutes, and it's time for This Week in Crypto. I skipped last week, but here we are. Everyone's really excited today because Bitcoin has had its largest rise in 6 months, and we are quite literally exactly where we were 2 to 3 weeks ago when last we spoke. It's amazing to me how people forget where we came from. Effectively, Bitcoin is traded in a range. It was at the exact same price on August 19th, in this right around here, moved around till the 26th, and then of course it dropped down to test not the absolute low, but if you look at a chart, there's now a nice little triple bottom in the 18,000-ish range, but we're still in the trading range. And all the excitement is kind of misplaced, but hey. The other thing that's really kind of funny is you look at Ethereum, and it's also in the same trading range. In fact, Ethereum is exactly the same price that it was more or less on the 19th, and the ratio of Bitcoin to Ether is more or less where it was on August 13th. So with all this talk of Ether going to flip in Bitcoin, the merge is coming and it's going to go, and this is all people piling in, obviously it was a lot of noise. Now, could it happen post-merge? Sure. People could get more bullish on Ethereum, but the reality of the situation is that there's still risk in the merge, and there's still no reason to believe that when the merge happens, that fees network fees will drop and network congestion will drop, which means it's really hard to see the metrics that are going to drive Ether immediately. That's not saying that it can't happen, because of course it can, but as I said when I was with Scott Melker earlier this week, honestly, the use case for Bitcoin and the use case for Ethereum are different. And I can't really handle anymore listening to Bitcoin maxis or Ether maxings squabbling. They remind me like children on a playground. And it really is a pretty good analogy because they're all fighting over who's better, who's going to be better and stronger when they grow up. But the reality is neither Bitcoin or Ether is even close to a price level or a market cap that captures what it would be when either grow up. In Bitcoin's case, digital gold or a global store of value for transactions on the internet, and Ether for the platform that could run most of the new use cases in the digital economy, whether it be NFTs or DeFi or other contractual arrangements around whatever. There's so many different ones. I don't want to go through all of them. There's quite a bit. And the reality is the market cap for whatever underlies both of those things is going to be orders of magnitude higher than they are today. So why they're squabbling, honestly, it's annoying and actually is used by people to denigrate both. And all the people who support various cryptos should really understand that they're playing into their hands. The only other thing in the market that's actually kind of fascinating is seeing Luna kind of rise from the ashes and get back to the levels it was, at least intraday, where it was when it debuted. The new Luna, the replacement Luna on the Terra blockchain, over more than tripling at one point today. To me, that I don't know what to make of that because I still can't figure out why there's any value there. But there probably is, and I don't want to be inundated with people yelling. I just don't understand. I make no claim to know what the value is. I'm not saying there isn't value. But what it does show me is there's some amount of animal spirits that are still alive and well in this market. And if we ever did get to a bull run where people realize that there is no way for the Fed to escape this mess without printing money. They might raise rates to make it more expensive in the short run, but they need to keep the long end of the curve low to allow governments to finance. And in Europe, it's even worse, where the energy crisis that's looming over this winter could be rather catastrophic. So don't be remotely surprised to see more liquidity getting pumped. In any case, that's going on in the market. The news side has been remarkably light. There's been another couple of conversations or talks by Gary Gensler and also the head of enforcement of the SEC, basically threatening to kill all of crypto, because in Gensler's case, he refuses to acknowledge that existing SEC rules don't work for crypto assets. I've pointed it out numerous times what that means, but very basically, there's no way for a security and a commodity to be in the same transaction, and so trading Bitcoin against any quote security that he calls digital literally is a non-starter under SEC rules. Not to mention the fact that they make no allowances for bearer instruments, for self-custody, for on-demand settlement, the whole tick size regime, all the other market stuff it's all anathema to the way crypto trades. And frankly, that's kind of important, and he completely ignores it. But we know that's true. The only other thing that is worth noting that is kind of interesting, because everyone has looked at it and said, well, crypto's the Wild West, and that's where the problem is, we need new regulations. But there's an allegation out this week from Vermont, I think it was, that Celsius was actually a real Ponzi scheme, where they were taking deposits from new depositors and using it to pay interest to old depositors. And if that is true, then there is no need for new laws. Old laws will be remarkably effective in prosecuting them. I don't know if it's true or not true, and as I've said before, I really try not to comment on Celsius one way or another, but it is noteworthy that that allegation is now surfacing, because that's the kind of thing which points out a theme that I've held many times, and I've talked about it a lot, and that is fraud should always be prosecuted, and we probably don't need new rules or laws to prosecute said fraud. What we do need are better disclosures. We do need an industry that's willing to work with regulators, and of course we need a regulator willing to work with the industry to get to the appropriate disclosures so people would know what they're investing in. But we could talk about that more in a later time. The last snippet that I'll comment on, because it's actually kind of interesting, is Brian Armstrong and Coinbase backing the lawsuit against the Treasury in the Tornado Cash dispute. Now, I don't know why that is. My basic assessment is that it's probably a good idea to fight back on this one, because the idea of prosecuting code sounds remarkably like a First Amendment kind of issue to me, but I don't know. And I'm not a lawyer. I haven't looked at any of the papers, so I don't know what the lawsuit is alleging. But it is interesting that this is not going to go down without a fight, at least in some respects. It's a story that's going to evolve, and it's going to have large ramifications for the industry, but it's way too early for me to have a clue as to how it's going to be. So anyway, let's hope maybe something different will happen in the next week. Maybe not, but either way, we'll be here to follow it. So have a great weekend, everyone.